Hello and welcome to Smaulgld, Shanghai Gold Exchange Withdrawals Update for the year ended 2017. In 2017, the Shanghai Gold Exchange had withdrawals over 2,000 tons. Indeed, they were 2,030 tons. That was up 10% from the 1,845 tons withdrawn in 2016. Before we get started, just a quick note. The Shanghai Gold Exchange is a far better proxy for gold demand in China. A lot of people look at the reports I do on the People's Bank of China, and the People's Bank of China has been showing that they have not purchased any gold or added any gold to the reserve since October 2016, leading to cries of they're lying. Well, not necessarily. Well, it's possible that the Chinese, due to their lack of transparency, may indeed be lying, but more likely it's that the People's Bank of China is not the only repository for gold in that country. A lot of gold is held and added to entities such as state-owned enterprises, state-owned banks that are either partially or directly or indirectly owned by the People's Bank of China. People's Bank of China has other concerns other than adding gold. A lot of people think because of the gold and alternative financial media that everyone in China wakes up in the morning and runs out and looks for gold, and that Chinese people are smart and they get it, and that's why they're always thinking about gold, and they read Sun Tzu, and that the people in the West don't understand. Well, that's not entirely true. The People's Bank of China has a lot of things to worry about, a lot of things to think about, and a lot of policies to enact other than just adding gold to the reserves. A very important thing to look at for the People's Bank of China has been their reserve position. At one point, they were down 1 trillion in reserves from 2015. They're slowly building those reserves back up. China has a lot of debt issues. They have a lot of issues trying to move from a service economy to a service economy, from an economy that has manufactured GDP growth from manufacturing and construction. And China is realizing now that they have incurred massive amounts of debt. A lot of that debt is bad debt because it went into projects, construction projects that were financed by state-owned banks that lent money to state-owned enterprises. And a lot of that building was unnecessary and is never going to turn a profit because they built hundreds of 80-story skyscrapers, bridges to nowhere, roads, and other infrastructure projects that will not have a return on investment. So in order to manufacture more GDP, they realized that they can't continue just to loan money to build more projects. So now they're trying to spread out to the Belt and Road Initiative and build more infrastructure projects in areas that don't necessarily have a, I would say, a market demand for such infrastructure. They're going on the understanding that that infrastructure will be such that if you build it, then economic activity will follow. That's not necessarily true. I heard somebody say it's like the Marshall Plan. It's going to be bigger than the Marshall Plan. The difference is the Marshall Plan rebuilt an area that had already demonstrated a capacity and a history of generating economic returns. Most of the projects that are slated for the Belt and Road Initiatives are in areas that have generated up till now and historically very little economic activity. So again, that is a crapshoot, and probably the most economic activity or the biggest gains that will be made will be in the employment and construction of those projects, not necessarily the return from those projects. So that's just what I want to get across when we talk about gold in China. The People's Bank of China has other things to worry about. They are trying to centrally plan an economy. They are not focused exclusively on gold. They're certainly not focused on coming up with a gold-backed yuan. And they're certainly not sitting around reading Sun Tzu all day and crashing dollar hegemony. They have other issues. They want to internationalize the yuan. They don't necessarily want to replace the dollar. They want, really, the reason they want to internationalize the yuan is so they can borrow money externally, just like the United States does, rather than just printing money and lending it to themselves. And of course, that's a conundrum for them because they do that. Very few international or central banks want to hold the yuan because they don't trust it, because they know that the yuan can be used as a tool. If they need to devalue it, they will devalue it, and thereby there go your value of your yuan reserve assets. So that's why countries don't hold the yuan. Now back to gold. The gold withdrawals on the Shanghai Gold Exchange were robust in 2017, as we mentioned, up 10% from last year. Here you can see I've put together a chart of monthly gold withdrawals. You can see starting in 2013, really started to pick up in the gold withdrawals on the Shanghai Gold Exchange. This past December was the worst December since 2012, but really nothing to sneeze at. 185 tons withdrawn. It's not as good as the 2014 235 tons, but still very robust gold numbers coming out of the Shanghai Gold Exchange. The Shanghai Gold Exchange is a futures market. It does deal in contracts, but it also has a lot of gold being withdrawn, delivered, and so on. Compare that to the COMEX, where it is purely, or not purely, but almost purely, a paper market or digital market where people are trading to get exposure to the price of gold. For the most part, 95, 99% of the contracts either are rolled over or they expire by their terms. Very small percentage of the trading that goes on the COMEX results in a delivery of gold. Only 85 tons in the whole of 2014 versus 137 tons delivered in 2 weeks on the Shanghai Gold Exchange in a given period in 2014. So the COMEX is not going to default. There's a lot of stories. It's another nonsense story here. It's going to default. They don't have the gold to deliver. Well, for the most part, the traders aren't there to purchase gold. If they want to purchase gold, they'll go out and they'll broker for the gold. They don't buy futures contracts with the intention of taking delivery, although there is a delivery option. Here's a chart you can see comparing the difference between the Shanghai Gold Exchange and the COMEX, and you can see for the last 3 years, well, this is 2014, 15, and 16. If you add 2017, the Shanghai Gold Exchange is delivering or having withdrawals of over 2,000 tons on average per year, and the COMEX basically 85, 46, and 222 tons respectively from 2014 to 2016. If you want to add gold to your own stack, please consider doing so through the Smaulgld site, through the affiliate links at BGSC, Golden Eagle Coin, SD Billion, Money Metals Exchange, or at the links below this VidMe. No, VidMe's gone. Or this BitChute and YouTube. You can compare pricing and shipping, and if you do click on those links and you do buy through those links, Smaulgld gets a small commission, but you pay no more, no less than if you visited those sites directly. So not investment advice to buy gold or silver, but please consider, if you're going to, shopping through those links. Now here's a chart that shows basically that 2017 was the fourth best year over the past 10 years or so, with withdrawals over 2,000 tons, but you could see there's a consistency since 2013, averaging well over 2,000 tons, with the peak in 2015 of 2,596 tons. Thank you very much for listening. If you've enjoyed this report, please consider subscribing to this channel, subscribing to the Smaulgld website. Go directly to the website, just fill in your email address. Also becoming a Smaulgld patron, donating through Bitcoin, PayPal, or even Litecoin. Thank you very much for listening, and we will talk to you certainly more during the week.